In this tutorial video, we will show you how to use the cap rate calculator available at Hauseit.com. If you're not already on the calculator page, you can get here by typing in Hauseit.com in your browser bar or simply by Googling Hauseit. The spelling is up here. Now, once you're on the Hauseit website, go to Calculators, navigate towards the Buy tab, just hover over that, and down here on the right, you will see the cap rate calculator. While we're here, worth pointing out that there's a couple other calculators you might be interested in if you're buying a rental property. The first thing you'll want to look at is the buyer closing cost calculator. And that's actually important because you will need that as one of our inputs in the cap rate calculator itself. If you're buying a house or a condo in the city, in New York City, and you're financing, your closing costs will be around 4%, but they do vary based on the amount you're financing, as well as the specific purchase price as it relates to the mansion tax. The mansion tax was recently updated in New York City, and it was changed from a fixed tax of 1%, regardless of purchase price above $1 million, to 8 separate tax brackets. So if you want to learn more about the mansion tax and how that's changed, how it will affect your purchase in New York City, you can consider trying out the mansion tax calculator. So going back to the cap rate calculator, let's start by just giving a brief overview of how it works and what the point is of the calculator itself. So the main reason why we're looking at this, again, is because we're probably considering a number of real estate investment opportunities. And we want to figure out a way to compare opportunity A versus opportunity B, or potentially compare investment opportunity in city A versus city B. The cap rate is a metric that allows us to compare real estate investments and determine which one may have better fundamentals and might have more attractive upside. Specifically, the capitalization rate is a very basic formula, which is essentially a rental property's net operating income divided by the purchase price. So for example, if your income net of expenses is $50K and you've bought a $1 million property, your cap rate is 5%. Customarily speaking, a cap rate is supposed to be in line with the incremental risk of an opportunity. So if, for example, you're in New York City, which is considered to be a pretty low risk environment, you have a strong economy, good fundamentals, cap rates should be pretty low. If we compare that to another city like Detroit, we would expect Detroit to offer significantly higher cap rates. And that's really just to compensate us for the incremental risk associated with the city. Specifically, you have a less robust economy, you may have a population decline, and you have other deteriorating fundamentals, which certainly do mean that investing in real estate in general is riskier there versus a city like New York. That being said, the cap rate calculator is extremely helpful in general, regardless of whether you're looking for an 8% cap rate or a 4% cap rate. It will help you accurately compare investment A versus investment B. So let's go ahead and give it a shot here. We're going to come up with a bunch of assumptions, and by inputting all of these things over here, we are going to generate the cap rate calculator returns, specifically our annual NOI, our cost basis, and then essentially the cap rate is the annual NOI divided by the cost basis. Very important to mention that the cap rate itself is not related to the financing structure of a deal. And that's because many investors will have their own preferred methods for financing. They'll have different costs of leverage and financing, so on and so forth. So if the cap rate factored in financing structures, it would be impossible for investor A to compare her or his cap rate returns to those of investor B. So again, a cap rate, it is a figure that is a standalone figure that's not related to the underlying fundamentals of the financing structure being considered. It's basically a cash return type of analysis. So if we are to go ahead and use the cap rate calculator, let's go ahead and just plug in a purchase price of $800,000. And for closing costs, assuming we're buying a condominium, let's quickly use the buyer closing cost calculator to come up with an estimate there. So let us take a pretty typical scenario here. We're buying an $800,000 condominium and we are financing 80%. It's not new construction. Keep in mind, if it's new construction, you'll see that the closing costs go up from about 3.2% to about 5.4%, and that's because the buyer, as opposed to the seller, usually will be paying the transfer taxes if you're buying a new construction condominium. So we have an estimate here of about $26K for the buyer closing costs. So if we go back into the cap rate calculator, let's put in 26,000. Now for renovation costs, let's assume this apartment maybe needs a few touch-ups. How about a new floor and repainting? So let's say about 15,000. And then for monthly rental income, we can completely make this up. Let's go ahead and say it's 5,000, which for New York City would actually be pretty high, very high actually, for an $800,000 property. For annual expenses, property taxes, let's just plug in something like 7K. Property insurance is your HOA insurance. It's usually around 1,000 or 2,000 a year. So let's just put in 1,250. You can get a more accurate estimation of this by going online. There's a number of companies that will actually give you the ability to both create a quote and actually purchase it immediately thereafter. So if you want super accurate inputs here, feel free to just Google that. Now for common charges, we can just go ahead and assume something here, say around 8K a year. That would be about $600, $700 a month. Maintenance and repairs, we're just going to plug in a random number, 3K. So let's assume that you need to hire a contractor for a week or two to do some various repairs. Maybe you had to buy a new washing machine or something like that. Utility bills and other expenses. This is an interesting field because in theory, if you have your tenant paying a lot of these, then really you shouldn't be putting them here. So let's just say utilities, things that you have to pay are $1,000. Now the property management fee and vacancy rate is up to you. The vacancy rate is really meant to incorporate some degree of adjustment for the reality that it may be the case that you're actually looking for a tenant for a month. Maybe your new tenant moves in 2 weeks or a month after your old tenant moves out. So if we were to say that your apartment is vacant on average 1 month a year, we would do 1 divided by 12, which is around 8%. So our vacancy rate would be around 8%. Now let's go ahead and put 0 for the property management fee. Real estate is a pretty local game. So if you're just an individual investor and you live in the area, you have only a few of these properties, you may very well be actively involved and you probably won't have a property manager. If you're doing this in large scale, you might have a team that might charge you a management fee. And certainly if you're out of state, out of town, and you cannot easily access your properties and manage them yourself, you may want to plug in something here for the cost of a professional manager. So we filled in pretty much everything here in the cap rate calculator, and it looks like outright our cap rate is around 4.16%. Now in terms of the cost basis, here it's $841,000. If we figure out how that's calculated, it's basically our purchase price plus closing costs and renovation costs. So that's 826 plus 15 exactly matches 841. Now for our monthly net operating income, this is computed by taking our monthly rental income and then essentially dividing that, or rather dividing the expenses by 12 and then deducting that from the rental income. So this cap rate is actually pretty attractive if we're in New York City. In New York City, for a typical condominium, especially if you're in somewhere like Manhattan, you're talking about low threes, possibly even as something that's better than average. Once you get north of 4, it's an exceptional opportunity. You can obviously achieve a higher cap rate by pivoting into parts of Brooklyn, Queens, the Bronx, boroughs other than Manhattan, or you could possibly pivot into the multifamily space. Multifamily properties usually have a higher cap rate. They are more attractive primarily because you have arguably a smaller buyer base. So a lot of buyers are not interested in having to deal with a boiler issue or fixing their roof or working on a facade. So you certainly exclude a lot of foreign buyers or more conservative investors from the buyer base. And furthermore, multifamily properties do have arguably an incremental degree of risk when it comes to tenants making repairs and things like that. So you should expect the multifamily property to have a slightly higher cap rate, but in our opinion, in general, if you can find the right opportunity, you're going to have substantially similar risk to an individual apartment, especially if your tenants have the same income earning power as tenants who would be buying something in Manhattan in a condo, for example. And if you're able to manage the property and you have some experience in that, or you have the appetite to learn, it should just give you a nice windfall, a higher cap rate compared to your typical apartment. And again, if you're in a different city, this cap rate is going to look really low. So if you're in, say Chicago, or you're in, somewhere in a city that is not necessarily a tier 1 city in terms of income statistics and economic growth and population, you're going to be getting a much higher cap rate. Final reminder here, so you can actually email yourself the results. So if you want to do this for a couple of investment opportunities, you can email yourself the results so you have them for your records. You can also print a PDF, and if you want to just start again, you can click the reset button down here on the right. If you have any questions about how this calculator works or how you can use it in your own pursuit of real estate investments, leave a comment below the video. You can also give us a call, email us, text us. If you're in New York City, there are some ways we can help you save some money on the purchase, thereby increasing your actual returns for your investment. So give us a shout if you are in the city or if you have any questions. And we wish you the best of luck out there as you pursue your real estate endeavors.